Good evening friends, my name is Narendra Kumar and today we'll discuss about co-lending by NBFC and banks. So in this topic we will highlight about the regulatory requirement that how as an NBFC or as a bank you can do co-lending. So co-lending means two organizations will come together and will start lending to end consumer. First of all, we will need to understand why co-lending is important. So sometimes we know that the bank has no such reach to the rural areas or to the some segment of the business. So Reserve Bank has a view that if NBFC and bank will come together, this will help of course bank to have more and more customers, and then they will increase their reach and of course they will increase their profitability. So co-lending model works like for example, X is an NBFC and Y is a bank. So bank will lend to NBFC or housing finance company, and further housing finance company will source customer and will also do collection, and then lending will happen. But why this happened? What was the reason that regulator has a view that co-lending should take place? So recently, as we know, that UCO Bank, Central Bank has signed with several NBFC and housing finance because they are not able to generate sufficient revenue in their business, or there is also requirement if we talk about the digital lending. These days, digital lending has bigger market share in the lending space, but most of the banks are not able to digitalize themselves or have a digital sourcing system in their business. So Reserve Bank has a view that okay, if you are not able to upgrade yourself with the time or you are not able to source customer properly, let this function to be done by an NBFC or housing finance company. So this requirement has been shifted now. So NBFC will work as a partner, HFC will work as a partner for housing finance company, as a housing finance company, and bank will work as a funder. So funder will be, for example, if you talk about Central Bank and Y is an NBFC, so Central Bank will lend to Y in their escrow account, and then Y will lend to end customer. So sharing of loan should be 80-20, which Central Bank has suggested that 80% finance will be arranged by bank and 20% finance will be arranged by the NBFC. And according to their risk criteria, they can share their revenue. And I have some details which I would like to give you. So recently, if you talk about November 2020, the guidelines has been given very clearly about co-lending business, and Central Bank and UGRO Capital and other SBI has also joined Adani Capital for co-lending to farmers. You will be very surprised that SBI has such large scale of business, such large branch in India, and they are doing co-lending with NBFC to expand their customer base. This is important to, if you want to expand your customer base. NBFC is a private sector company, or they are privately managed, or they have a very strong management who has strong focus and very specific to their business. That's why the co-lending business takes place. So end of the summary is a fund will be provided by bank to the NBFC, and bank will put its own fund, for example 20%, and will lend to end consumer. Similarly, bank will not require to do collection of its portfolio. NBFC will require to do collection of portfolio. NBFC and bank will have its own guideline of underwriting and risk system, and both together will make revenue and they will share revenue with each other. Now we look forward that this will help to a lot of NBFC to fulfill their capital requirement, and this will help them to strengthen their business. In case you have any question with the NBFC business model or co-lending processes, or you want to design your co-lending process, do not hesitate to contact Enterslice. Don't forget to subscribe our channel and click on the notification button so that you can receive further updates, further video from our side. Thank you.